in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hacket. Shawn Hacket is a financial advisor with Hacket Financial in Boca Raton, Florida. And this edition of the Moving Iron Podcast is brought to you by Dawson Tire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. TractorZoom, delivering insights, and Dryshod Boots, the official work boot of the Moving Iron Podcast. Shawn, how you doing this morning, man?
I'm doing pretty good. Another fun day in Commodityville.
Oh boy, I tell you what, nothing but fun and games, right?
Yeah, for sure.
Nothing but fun and games there. So today I want to focus on when was that? The 28th. So Monday you put out a report on. Basically, you were talking about, and the title of it is. The waiting game almost over, and you were basically focusing on the corn market and what that looks like, and that we are headed towards that bullish phase of the corn market that we've all been waiting for. And I'm sure as we're recording this right now, today is the 30th of April, and I am sitting here recording this with Shawn, and I'm sure some people are like, yeah, have you been watching the corn market, Casey, over the last 2 weeks? We've almost had a 2 in front of corn 3 or 4 times in that 2 weeks. So it's going to get significantly worse before it gets any better. And there might be some truth to that. It could probably get worse before it gets better. But like you and I have talked about several times on this podcast, that there are so many monikers around the world that trigger what happens in the U.S. as far as commodity prices go, and we are starting to see some of that stack up. There's some dryness in the Black Sea regions of the area of the world, and their people are shutting off their exports of what they do have outside the country. Russia being one of those. Ukraine's talked about doing that. Countries like Egypt are buying up commodities as fast as they can afford to buy them. Of all kinds, and we're seeing that happen around the world. Seeing some dryness in key growing areas in South America. A lot of the stuff is stacking up with the La Nina effects that we're seeing coming in, and as far as the solar cycle stuff goes that we've talked about as well. So, Shawn, let's talk about your report here a little bit, and let's kind of dive into this, and let's talk about the corn market a little
bit. First thing is, we always try to figure out the psychology. So if we think about last June, when we had the historic delayed planting, record prevent plant, 470 corn, how bullish everybody was. Everyone was thinking 5, 6, it's got to go higher, massive shortage. And of course that was the top. And now we're exactly on the opposite side of the psychological sphere. Demand's horrible. Ethanol's never coming back. The virus has caused a depression that we're never coming out of. We're going to plant too many acres of corn. We're going to have billions and billions more bushels than we thought. People projecting, $1.50 corn. I mean, everyone's out there saying that there's just it's a one-way trade to the downside. Our experience has been that when everybody leans that myopically dystopian on the negative side, you're ready for a turn. It's just it's just the way it is. That means everybody who has not sold corn right now because of how bearish. I mean, if you have not sold corn now, you're probably not going to sell your corn right now because everything is telling you to sell corn. So from that place, we get interested in looking for a lull in any market, not just whether it's a corn market or anything else. So just remember how, if you're a farmer watching this program, remember how you felt last June. And remember how you feel now. You were dead wrong last June, and you're probably going to be dead wrong now. It's just the way the psychology works with these things. So to further parlay that, Casey, you look at capital flows. We call them smart money inside capital. It's an algorithm we created that looks at commitment of traders data. We handpicked certain aspects that have had a really good track record of determining when buying means something or when selling means something. So we had a big-time sell signal late last June that gave us a hint that bullish psychology had run its course, that it overplayed whatever the bull case was. And now, finally, we're starting to get smart money buying that is getting to levels or close to levels that historically have been associated with the corn market trying to make a low. And so that's starting to tell us that it appears, based upon the smart money behavior, the bears might be overplaying the bearish case, meaning whatever the bearish story is, it may not be entirely true, meaning there may be an overplaying of it that we'll find out in a month or two they got it wrong, and here's the reason why. And the market really was underpriced based on what the true fundamentals were. So we like that concept. Very bearish sentiment. Smart money, getting close to what we call a buy signal, and then when we get that, what we try to do is say, what's going on in the world that the market may be ignoring? Because remember, when everyone's bearish, they ignore bullish news, and they only focus on the bearish news. So if you get a bullish export number, it doesn't mean anything. But look at the ethanol, and they just go right back to the bear because that's what they want to focus on.
Right.
So what are they not focusing on that 2 months from now they might be on the headlines of all the news stories? Well, you've talked about this, that the dryness that we've been seeing, perpetual dryness in South America, we think means substantial downgrades to the corn crop are coming in the next couple of months. We see Brazil's especially heading into their winter season, and the way we're looking at the virus down there, it's going parabolic. Mm-hmm. And they're entering the period where community spread is likely to accelerate that. And we think there's a pretty good chance that a lot of workers down there are going to revolt. They're going to strike. They're going to riot. They're going to say, we're not going to the ports. We're not going to...
Not in Brazil. They never strike in Brazil. That never happens.
Never Brazil. So we think there's a really good chance that even though China has logged all these exports, they think, it's one thing to say, we've got a price, but if you can't deliver it to the buyer, he doesn't have it and he needs it. So we think there's a pretty big story that could play out here shortly. And of course, look, we're just getting started in the growing season.
Yeah.
In most years,
so much can change. Yep.
A lot could change in June, July, pollination. Hot, we think hot and dry is going to be the issue this year, as we talked about, many months ago. So, just a ton of things that we think the market is completely ignoring, not giving any credence to, that any combination of them may start to surface, and you're going to get a lot of these speculators that are short running for cover and getting out of the corn market. So when we look at all that, can we go lower? Sure. We still have a USDA report out on May 12th, I think it is. Mm-hmm. Sometimes the market likes to go sell the rumor into a report like that, and maybe that puts the final low increase. Maybe that's it. And then when the bearish report comes out, the market reverses. Everyone is shocked. They can't believe the corn market went up that day, and then it will look back. I mean, a lot of times that's how it works. So we're pretty constructive here, and we would, if anyone is out there thinking there's no hope for the corn market, we would argue we're most optimistic now in the corn market we've been in over a year. I'll put it out that way.
So. Well, the other side of that too is if you talk about crops getting downgraded in South America, Argentina about every week has come out for the past 3 or 4 weeks, 5 weeks, something like that, have come out to say, hey, you know what? Our crop's not as good as we thought. Or, hey, you know what? The bushels aren't going to be there. Or, hey, you know what? The quality isn't what we thought it was going to be. So we're going to downgrade the crop by 2 or 3 or 4% and something like that. So that's starting to ring a little bit true. But to your point, the focus right now, chaos and all this nasty things that are going on right now are great for the news cycle because that's what sells, right? No one really cares about the good things that are happening in the world. They want to know the worst possible thing that could be happening. And quite frankly, that's what the news is reporting. And the more we look at that, the ethanol thing is awful. It's horrible. That's a byproduct, though, of the oil market. And as the economy gets to come back open and the Saudis and all the OPEC countries are scrambling right now to reduce production as much as they possibly can. They're talking about a 9 million barrel a day reduction, and they're scrambling to do that. And I would suspect that, $17 Brent crude is not going to be something they're going to keep hanging around very long. So that 9 million could turn into 15 million, who knows? And next thing you know, we're getting that $40, $50 oil back again, which then spurs the commodity or the ethanol market to come back into play. But to the point of what we see happening now, it hasn't been dry like this during planting season for a while. As I look at what's going on out here in the Panhandle, it's dry out here anyway. It's not a big deal. We turn the sprinklers on and then pump water on, whatever. But if you go west, it's not till you really get into that Ohio River Valley, deep South Mississippi Delta area where you start hitting that heavy rain again that you see anywhere else. And some of these Iowa, Illinois areas, they're dry. I mean, there's a fine line there. There's a pretty defined line. I talked to Glenn Birnbaum was on here the other day. We were talking about some stuff, and he was talking about how they just got 5 inches of rain overnight, and he lives in Peoria, Illinois. So I mean, there's all those. There's a pretty fine line there where that's at, and it's a very defined line. It's fairly dry on one side and it's pretty wet on the other. And going into emergence, that's a pretty important time of the growth of the plant, getting that thing started, getting it take off, the health of the plant, getting it going, and what that looks like. So if it's too dry on one side or too wet on the other, it kind of 6 1 half dozen another, you're going to have a bad start. And you have a bad start, your yields get affected. So I guess as you look across what's going on in Kansas and Oklahoma and these various places, it's dry. And I guess I mean, we're way ahead of schedule when it comes to planting, just like you talked about. Early spring.
We talked early spring, planting, and we said the corn market specifically had to trade that first in the month of April to get us to the lows. Of course, when we made that projection in December, January, we weren't wholly understanding of a virus that was going to come along and add lower prices than we would have seen. But the timing is the same.
Yeah.
Just we got a little lower than we would have gotten otherwise.
Right.
But I mean, things are happening. But you're right. The dryness is problematic. We think that some of those concerns of, we're off to a great start. Planting is better than it was last year. But then all of a sudden we're going to morph into, wait a minute, it's not emerging right. The conditions don't look so good. Wait, this isn't playing out like we thought. And all of a sudden, the 95 or 96 million acres turns out to be, something that has to be reduced because of productive acres that actually are going to produce yield of quality grain, quality corn. The other thing that I would mention, probably how the market, the bad thing about ethanol is we're not producing any.
Right.
The good thing about ethanol is we're not producing any.
Right.
And I say that twice because the minute that demand for gasoline goes up, there's no production, so we're going to run these stocks down. So let me just give you a figure real quick that I saw this yesterday. Ethanol production continued to decline this week, but it was encouraging to see ethanol stocks decline. Gasoline demand seems to have bottomed, but still has a long way to go to get back to where it was in February. Some states are starting to slowly open up, which is fueling expectations that gasoline demand will continue to recover. These states will be closely monitored. When we look at some of the demand side figures here, let me just put these figures up. It's really interesting that, of course, the market's not paying attention to it right now, but listen to these numbers. Demand gasoline demand increased 15.7% since hitting a low 3 weeks ago. And we haven't even begun to open the economy. We're just getting started. So already we're 15% off the lows. Of course, it's still way down from last year, but where I'm getting at, we're already seeing better demand. Ethanol production, with lower ethanol production and increase in gasoline demand, ethanol stocks declined to 1.106 billion gallons from 1.163 billion. So we're already reducing ethanol stocks, and we haven't even gotten started with opening up the U.S. economy. What's going to happen a month from now or 2 months from now when, let's say, half the country gets back open again compared to what got shut down? These numbers are going to collapse, Kate.
Yeah.
The ethanol price can go through the roof.
Yeah.
I mean, so I really think that there's a lot in here about how we're already actually getting a bullish adjustment here in ethanol without even getting started. And I think people are pushing this bearish ethanol fundamental too far out, thinking it's just going to continue into the end of the year. We think it's maybe a couple of months.
Right.
And then we'll actually get back to some more favorable, and that could be a big misfiring on the bears, why they're getting it wrong, putting the corn market near 3. But that's the thing. Everyone's ignoring this. It doesn't matter. It doesn't matter. Actually, it does matter.
Yeah. Well, they also got to take into consideration every gallon of gasoline, a certain percentage of that, 10 to 15% of that is ethanol. You know, there are some gasoline out there where it's just 100% non-ethanol gasoline, those kind of things. But that's such a small fraction of the gasoline that's out there that 95+% or whatever the number is an overwhelmingly huge majority of it is got ethanol in it. So, you know, for every one gallon of gasoline out there, there's going to be 15%, 1/15 of that gallon is ethanol. You know, so it's a big deal. There is going to be a proportionment as gasoline stocks or usage goes up, so will ethanol usage. It's just because of the mandates from the renewable fuel guidelines. So there's all kinds of things out there, and I'm with you. I think this is one of those deals where it's horrible right now. It's bad, but I haven't been in the farm business my entire life, but I've never known when they go to plant something that the commodity price is the high, right? It's the high somewhere in the midsummer, right? It's in between that. Okay, now we kind of know where the crop's at. We kind of have an idea. We're going to start trading we're going to waiting for the calm air a little bit, and we're going to start pushing that out there. And it's usually that time frame. So, as we push forward and we move forward, what are some of the indicators you're going to start looking at to start saying, like, okay, this is some bullish moves are coming our way?
Well, I mean, a report like this on ethanol, is the first sign that we're getting the first inklings of a change in that key fundamental. I mean, corn is here because of ethanol. So
right.
Let's put it right out there. I mean, that is the key ingredient that has knocked this thing off its kilter. That's one thing. The other thing is to start, we're going to start getting crop ratings here, in a little while on corn. And, the market's going to gauge where are we starting the crop conditions versus where we normally start the crop conditions. And we, like you said, we haven't had a dry planting season in quite a while. But what's going to happen is that we're going to start off the season with conditions that are going to be quite a bit below what we're accustomed to starting. And the market's going to go, well, that's not, well, if we normally start here and then the yields are, all of a sudden they're going to start saying, well, maybe we've priced in perfection, but that perfection maybe we overplayed that. Maybe it's not perfection. So look at how we start crop ratings and notice if they're quite a bit below where they normally would be, or let's say the 5-year average. That would be another thing to take a look at. The other thing that I would continue to take a look at is we think exports for corn are going to continue to be strong. We think they're actually going to accelerate, especially at these lower levels. They're going to accelerate. So we would continue to look for the ethanol, corn exports relative to the USDA current estimate, where their baseline is. And I think that we're continuing to trend above the baseline. And so what all this does, Casey, when it's like a jigsaw puzzle. You put ethanol doing better, you put the exports doing better, the conditions not quite right, take a little bit of yield off, shave a few acres off, all of a sudden the balance sheet starts to shrink. All those balance sheet spreadsheet analysts that are running around talking about 3 or 4 billion bushels of corn, they're going to have to start running the corn supplies back down and doing the same thing in South America. And all of a sudden what was this overblown, bin busting supply becomes something that, hey, if we have any weather problems, this could get a lot tighter than we were anticipating. Maybe $3 corn isn't the right place to be. And so these are the, and what we really are looking for from a indicator perspective is we really are looking for our smart money algorithm to trigger our buy signal. The last buy signal we had in corn, by the way, was late April of last year. We haven't had a buy signal in corn since. So we're real close. Maybe this is the week we get it. Maybe it's next week. But we think we're probably going to get a buy signal here within the next couple of weeks. So that would be another thing we'll really be looking for to confirm that those that know more about the corn market than anybody else are as they say in poker, you're going all in on this, right? So.
Right on. All right. So as you take a look at some of the weekly export reports that are coming out here this week, so the expectations are for corn to be somewhere between 200,000 and 450,000 metric tons of corn, which is about a third of what it was last year. What's your thoughts on that? And do you feel like those export reports are getting undershot, or do you feel like they are just being cautious, or do you feel like that is a legitimate number?
I think everyone's being overly cautious. I mean, the markets have been beat up. Everyone reads these headlines of, anybody that's been a bull the last 3 months has looked so bad. You're forced into a fetal position right now, and when in doubt, just be conservative. Just keep the bearish because you don't want to get caught being too bullish too early again. I mean, that's just what psychologically nobody wants to stick their neck out and say exports are going to be much stronger than we thought. So yeah, they're lowballing them, Casey. That's what they do at the bottom. That's what they do in extreme bearish sentiment. Everyone's scared to put anything out other than really, really bearish news because everyone else is doing it. So it keeps their job. They stay employed because, hey, everybody got it wrong, so you can't fire me because that's what everybody thought.
Right.
Well, we prefer to get it right.
It's good for business, yeah.
Because people that keep me in business are my customers. I don't have a boss that will fire me because I'm being a contrarian. So I have the luxury of saying what I think. But yes, the lowballing it. I believe the numbers are going to continue to exceed weekly analyst estimates until the bullish sentiment starts to improve here a little bit. So.
Outstanding. Well, good stuff as usual. China has bought some corn here. There's been rumored that they were out buying some cotton and those kind of things the other day, but mainly the U.S. kind of commodity markets kind of seems to me, as I watch this right here, is really hinging on what corn does, and more than anything, cattle prices are going to be hinged on what oil does, but seems like the overwhelming majority of the rest of the market is based on what movements in corn we see, I guess.
I agree. I think corn is the psychological driver right now for grains. As corn goes, so goes the grains. I think the corn market needs to get out of its slumber to get a change in the view that the grains are toast right now. And what's interesting is that the Chinese prices of corn and soybeans, even if you adjust for a weaker Chinese currency, have gone parabolic here the last couple of months. I mean, straight up moves are the prices of corn and soybeans. So we have the Chinese prices doing this, we have the U.S. price doing this. Mm-hmm. It's unsustainable. One side is wrong. Really, one of these markets has got it really wrong, and whichever one is right, either the Chinese are going to come down because they're wrong, or we're going to come up and I believe we're wrong, and we're going to come up more so and meet the Chinese price, and the Chinese are wrong and they're coming down. So that's a very interesting condition that, once again, no one's paying attention to because they're just not interested in anything that's bullish. But that is another indicator, another sign that whenever you see two important markets going opposite each other, one has to wonder, how could that, that cannot continue. And it's so wide right now that our work says U.S. markets have just overplayed the bearish side, and there's going to be some kind of a reversion to the mean. And that means, producers, are going to be looking at potentially some better opportunities to sell than they may think right now. Because I talk to farmers now daily. They're calling me. I get it. Look, it's a tough time, as you said, very difficult time. Everyone's scared to death. Bankers are saying, what's going on, and I get it, but and most of the farmers have totally given up any hope that the corn price can do anything. And not that I like to see that, but I actually like to see that because I hear that consistently in my 20 years. I only hear that at the lows.
Right.
So my view is, if anyone's on here that's involved in corn farming in any respect, keep the faith. I don't believe it's as dire as people think. It doesn't mean it's a raging, wild, parabolic bull market kind of thing. No, but I do believe that the market is going to show some more favorable prices going forward. And if you can be patient and wait it out a little bit. I think you're going to get an opportunity to do something that's going to make more sense than selling, sub $3 cash corn.
Yeah. Well, good stuff as usual, Shawn. If folks wanted to reach out to you and get some information on this latest report, or just pick your brain and see what's going on, what's the best way to do that?
Our website is Hacket, Hackett, advisors.com. Plenty of stuff on there to get a better idea of what we do, to see if we might be able to help.
Right on. Well, Shawn, thanks for being on the podcast, and have a good rest of your week, man.
You too, Casey. Thanks so much.
All right, I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram for all the latest Moving Iron podcast posts. Also, check out movingironllc.com for the latest Moving Iron stuff that's going on out there. I've got a new blog post and get ready to put out there here probably today, so it'll be hitting all the social media as well. Also, check out Global Ag Network and all the great podcasters out there, and check out Brent and Landon over there at the Dryland Farmer Podcast. So until next time, I am Casey Seymour with Shawn Hackett. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.